You guys.
Morning.
Hey man, how about you? Good morning. Alrighty. Oh. Alright, what a day yesterday, huh?
It started off well. It sort of trailed off in the middle, and the less said about the end, the better. But
So, let's do a little recap here. I'm not sure what I want to do today. I'll say why in a minute. Morning OS, Tony, good morning. So, we had... It was slow. It was pretty crappy to start. So, let's remove this. This was the runner from Tuesday. After I took the loss in here somewhere. No. So Tuesday started off. I was looking for price on Tuesday to take out these highs. And then I attempted that around about here somewhere. Somewhere around here. I think it might have even been that one. Something like that. Anyway, try to get that to go bullish up to here, and it just absolutely rinsed me. And then it just dropped into my support. The next support, like, went through the next support over here, over to the left. It didn't really pause, and then just like paused a little bit, and then just absolutely dumped into a higher time frame area. So lovely 4 hour, 15 to 30 minute area. And then we had a nice little rebound. 30-minute candles came to a close. Entered the buys. Pushed up. I took 80% off the table at this point, and just left the rest of the runner. And then price went up, came all the way back down. Tested the entry. Didn't do anything about it. Held. Paid swap fees. Pushed up, and then it took profit yesterday. At this point up here for 200 pips for the runner, which is very nice. Then didn't want to hold all the way. That was the job. That was my target. Then yesterday we had, let me just remove that now. We had our open, which was pretty crap yesterday. It just literally did nothing for ages. Had a buy in here, took some partials, and then the runner it didn't survive. But then it was pretty nice in the hour chart. We created that little, or 30-minute hour, whichever one you want. We created that little resistance up here, and this hour candle just really kind of just did nothing. This hour, then the next hour candle as well, kind of staying in the zone. It was kind of looking bearish, but then we got during the state of origin, we got the nice hour candle closing above. So then I opened the door. Remember what I said, once we close above here, that's what I gave in the stream at the end, saying that once price closes above this area, so this is the area that we're struggling to get above. So once we get above there and close above there, or like once we get above there with a pullback after so many rejections, if we've had the pullback and we close above here, then it should be fairly straightforward to push up. And it did indeed. So on the hour, here it is. This is where it closed above. Open the door, then got clean candles here to the left, take this wick out, push up through here, and then we just got so much momentum. Price pushed up. We had the first little rejection at this little bit. So this little order block across over here. That's where we had our first little rejection. See, that lined up with the some US news as well, and the Bank of Canada interest rates were about here. And morning Sarah. Once we had the Bank of England interest rates, there was a couple questions regarding this in the Zoom, in the Discord yesterday. Over here, Mark was asking about CAD rates packed in oil and gold. Dave asking if high PMI bad for equities. That's basically just saying, look, end of the day, the rate cuts from Canada and then likely today in Europe are going to likely hold more weight. Just didn't want to see any surprises at the presser, which there weren't. I said, pullbacks can happen, but I would expect the markets to be bullish over the next week or so. And then just saying here. So I did get a little bit concerned on Tuesday when it ripped down so hard in London. Made me pause. Other than that, all of this, you can see the times, it's 2 o'clock, saying that this is going to bode really well for gold with the US dollar weakening. Bond yields told us that early in the week as well. So all of this at 2 o'clock, before 2 o'clock. And this is the 2 o'clock candle for German. Pushed down to a lovely area of support, and then it was just all upside from there. Same thing with gold. Good old gold. Gold, this is the 2 o'clock candle. We had the rip down, and then it was just upside from here. Oh, look at gold moving now. So today we've got a bit of a problem. So NAS was absolutely on fire yesterday. I was expecting to see an all-time high yesterday. Morning, Ty. It was over here. Where was it? Yeah, stock buybacks as well. Like to see all-time highs now, and we did. We got all-time highs. All-time high. This is the highest NAS has ever been on the back of Nvidia. US 500, same thing, making a new all-time high. Nvidia now is the second biggest company in the world. Overtook Apple yesterday. Okay, now we've got an issue. We have where is it? Thursday. We have interest rates today for Euro. So I'm not too keen on trading German before the interest rates. They're expected to cut. So I'd like to see the same move as yesterday. The ECB press conference is going to hold a lot of things. And then for unemployment for the US dollar, if we're seeing signs of softening, you can see like the numbers are starting to track upwards. I'd just like to see something break out of this little range between 215 and 222. I just don't want to see a number fall in that. I'd like to see a number fall outside of this range. Then we can see a bit of a substantial little, maybe they'll hold a bit more impact. Anyway. So there we have it.
So with these, how you say buy the rumor, sell the news, or vice versa.
Yeah.
With these rate cuts, if everyone seems quite certain that they're locked in, then they're already priced it in largely, right? Or not? Because it seems like if the ECB rate cut today is on forecast, as forecast, then it's already been bullish as a result of that expectation, right? Or is it, or the equities behave a little bit more? Yeah, do they still have a big reaction?
The problem's the press conference. So they're pricing in. They'll be pricing in this already, that they're expected to cut, based on the comments that they've made in the lead up to the interest rates as well. Because we had last week, we had what's his name, Holzman. We had is it Vegas or Vagel or whatever his name is. Quite a few of them were all sort of saying, yeah, I'm going to support a rate cut next. I'm going to vote for a rate cut next week, and yada yada yada. All of that is helping them price in this move. Now, it's still like rumors until the news comes out, and then they might be pricing in the rate cut, but now they could start moving to pricing in the well, how many times are they going to cut, and they could be getting their hopes up and then when the press conference comes in 30 minutes later, this is the next chance for new information to come into light when they answer questions or they explain why they came to that decision. So then, they largely will be pricing that in because they don't want to be left behind. So a lot of this bullishness in the last few days would have already started. So the pricing is tricky. It's always quite annoying. So I think I was looking yesterday, and Financial Juice summarized what you know how you asked about PMI, if it's good for bad for equities, a good PMI. Remember that?
Yep.
Now, it was in here. I thought I was reading. I was like, man, they just summarize exactly what I try to explain so well. Here, it was around when I was walking. I think it was this. Yeah, I think that was this. So the ISM services comes in higher than expected, and now it's like, is that bad for equities? But it's there's two trains of thought here, and it's annoying to try to pick which one it could be. So the services coming in higher than expected with the service sector. Now there's a risk that it's interpreted as, look, there's more upside inflation risk with the service sector coming in good numbers. So is that going to be bad for equities because they perceive upside inflation risk? Or do they perceive it the other way, where they're thinking that, maybe this is going to benefit corporate profits from a hot service sector, and then that could actually lead to a bullish case. See how it could depends on how they see it.
So better corporate profits means a healthier business climate, healthier
more
industry.
profit, more profitability for the businesses. So therefore it goes up.
Yeah.
Or is it interpreted that, oh look, good service sector numbers is going to be an upside inflation risk, which is going to then impact. It's really annoying how, which one's going to take hold today. So on any day it could be perceived, if it's not just one moving part, it's what's the current sentiment. And I'm going to admit as well that trading's been a little bit shitty in the last few days, is because I'm usually I much prefer buying. I really do prefer buying equities because I find the ride is a lot smoother than when it's going down. But we've had, you can imagine, remember this day on, what was this, Monday? Monday was a brilliant day, but we've gone from, it's a really wiki day. So let me just bring up Monday. So Monday this week, we got a lovely trade for sells, and then price pushed up. So we just took the sells only, Then price came up, sort of pulled back a little bit, and then basically took out the high, and then we dropped. And the sentiment in the market on this day was largely bearish. It was largely like risk off sentiment, because like we had a nice gap up, we had nice price action to read to interpret this sort of session pick, but then it was largely a sentiment, largely a risk off day where money was flowing out of equities into safe havens. And then we have the next day. I don't know why there's a number. There we go. Then we had the next day as well, Tuesday, which was very much risk off, hugely risk off. And it was annoying because like it absolutely ripped down. And we had the same time the bond yields really dropping as well. And I was like, man, something doesn't make sense here. Like I really got taken by surprise of this move down. But it was still risk off. And I was thinking, like, after here, I was like, the mood's improving. Definitely the mood's improving. And then we had yesterday on Wednesday, which was very much a risk on day, and money was just flowing into equities. So we've had like price wick up, then negative sentiment, then New York sentiment improved. Yesterday, with Canada cutting interest rates, sentiment went through the roof. And now today, is there going to be a sentiment like, what if the euro don't cut rates, and then it's going to be back to risk off day, and it's just like you feel exhausted. It's like a bipolar market. But that's why I try not to like make too many decisions in this market. Just like if you get your trade, whatever makes sense, sweet, let's take it. If we don't, and then take a loss or it does something unexpected, it can be really annoying trying to like find the cause. And maybe there is no cause. It's just we've got the same piece of information that came out, but then we've just got two different pairs of eyes looking at it the same way and just perceiving a different result. One is that, look, good PMI, let's just say it's good PMI. These fellas see that as good for the service sector, for like corporate profits, and then this one is like, oh, upside inflation risk. And you're both right. You're both right, but which one held more weight on that day?
Yeah, yesterday I was really pleased with myself because I managed to pick the bottom of the London session, and then pretty much where New York took over the top just after the So I picked the bottom and the top perfectly. Not that I traded them, but I was really pleased that I picked those precise points. But then I realized that expecting any more than that would be ridiculous in a market that's so unpredictable. So.
Yeah, I must admit I took a lot of trades yesterday. In this more on NAS. I took it on German as well, when NAS was just powering up, and then when NAS was powering up and the German had done that big pullback from this area, which was pretty good area. I think Ivan, you here? You caught some of that, didn't you? I had a sell from here, thinking that it was just going to be like in this first bit. I was saying like for the late London session, looking for that pullback. I had a sell, and it was so freaking annoying because it was just not doing anything. So it was up in here. Had a sell, and I was in this trade for ages and ages. So like 130, 145, and then it was all the way here, and I didn't like. New York was coming out. I was like, oh Jesus, like New York Stock Exchange. So I ended up closing like at this point when it started breaking down. I just didn't want to go through NYSE. with that, and then I was like, oh damn it, 100 pips to the downside. But to be honest, it could have gone either way from there because NAS just went straight up.
And so Naz, you were just buying just because of interest rate cuts, Canadian interest rate rate cuts, and also proximity of an all-time high.
Yeah. Once it like never short an all-time high, so I was like, I'm pretty confident it was going to go for the all-time high, but same deal is like it was starting to move really quickly, so I was in and out. This is the just before the news, so you can see the timing. NYSE open, and then this is the Canadian bank interest rate cuts. And so like I wanted to wait for this one. Really volatile at this stage. And then I did got in for like a buy around here. Got in for a buy, super late. I took a screenshot of it. Where was it? Took a screenshot of it. Was like I was thinking it was a bit dumb because like this was the all-time high. This is the all-time high, but I was out at that stage, and so my buy was like this part of the candle, and it was moving really aggressively at this stage, and so like I was in profit, and the 30-minute I was looking at the hour because the hour candle is coming to a close, but I'll show you the 30 minutes as well. It was this one here. This one here was coming to a close. I think it was that one. So is that the end of the hour? Yeah, that's that. Yeah, getting close to the 4 o'clock. So this candle was just coming to a close, and I was in good profit, but because I kept on seeing all these fair value gaps, I was like, geez, man, I just can't afford to hold this, like, because not that it was a big size. It was just, it was moving so much that going from here down to here would be like 70 pips, and I just didn't want to hold that drawdown. So I was on the lower time frame structure, just getting in and getting out. So got in like here, and then took a little bit of profit, and then got in again here, took a little bit of profit, then got in here, and I kept on thinking I'm just gonna hold it, and I just couldn't. It was just moving. Like I kept on seeing like, you know, moves up like 20 pips, and I'm like, oh, I just want to take that, and I'm not gonna trade again. Then I see it pushing higher. I'm like, oh, I'll take another one, and and I took a lot of trades, and in hindsight, I should have just taken one and just held it and just turned the phone off. It was just there's so many gaps and liquidity left behind that it made me really nervous to not have it on, because I could easily see something like this. Plus there was a couple comments at 4 o'clock here that also made me think the market's ripping so hard. It was Macklem. This comment here, 408. I'm like, oh, maybe this is the one that's going to change something. So I liked all the comments, and then it was this last one where they said interest rates won't return to levels as low as before the COVID pandemic. So maybe they're getting a little bit. I thought maybe they're going to get ahead of themselves, and they're going to have a bit of a deeper pullback there. And having such a good day, I just didn't want to take a loss. But it was just by the end of it, when you started seeing like all equities rip hard, there was just no way there was going to be much sustained pressure for any selling. You can see the structure was holding perfectly. Like there was just never a single structure break. Absolutely crazy. Anyway. That was yesterday. I went for the buys at the pullback, couldn't wait on the sells, took the euro sell to buy now. Theory worked out, closing above that zone. Bullish today, euro made early move, sell to buy. Oh, great. Awesome, man. Getting so much better at coming up with your idea and then just backing yourself. Yeah, I think we're just gonna continue pushing. It's just we've got the interest rates. So, hey Spud, how are you? So, I'd like to probably focus a little bit on gold. So gold, we've had so we've got, so US dollar's fairly weak right now. This is the structure on the daily that we're just reacting from, like this area. We've got some gaps down below. So I think this is a pretty significant zone. We've got clean candles above here, though. Once we do close inside of here, we rip. But given where we are, with Asian session being so bullish, we've got a big gap to fill. So we've got a little HCS forming. One here, one here. So that's like a little resistance. Like that. Then on the 30-minute, yeah, we've got the Tokyo Fix down here, so at least maybe we can fill this gap. So maybe I'll look at shorting when we open 2370, the key level here. Got 2 minutes. Short down to at least this area. Take out that no wick candle. That would be 100 pips. So keep an eye on that. And 2 alerts. Let's look at German. So we've got London Open coming up. Ooh, making new daily high. Okay. So where we're heading to, if we push and bullish. These wicks make sense. These old zones make sense. Definitely these wicks. Let's just see. Nice move though so far. Is anyone else in it other than Ivan? Oh, TP's hit already. Beautiful.
18,810 is the target today.
18,810. This one up here. Yeah. OS took the pre-open line. Very good. Got some things to show you as well that I was working on last night. Plus, yeah, got a few things. It was a busy night last night. Had so much stuff I wanted to get done, and before I knew it, it was midnight. I had to get to sleep. Oh man, just gonna push. Buying so much nicer than selling. I used to prefer to sell than buy. I used to find once it got up to these all-time highs, because I think it was that mindset from currencies, is that near all-time highs, very hard to keep on pushing through. But on equities, it's if you're near all-time high, it's going to take the all-time high. Another 20 pips. Come on, push. At least get up to there. What do we have to the left? Oh yeah, for sure. For sure. What I found there on the Blue Guardian account now, because they've been switching the, like it started the MetaTrader, then it went to CTrader, now it's back to Platform 5, which is MetaTrader 5. That's when I noticed it yesterday, that when I was taking the trade and I was trying to bring my stop loss up to break even, you've got to have at least 14 pips away from price. So I can't enter a trade and then move it to break even unless it's ahead. Like I can only move my stop loss within 14 pips of the price, and say price is pushing up, and I want to then go, oh, I'm going to bring my take profit here. If it's within 14 pips, I won't accept it. Yeah.
Sorry, within 14 pips of what?
Where current price is.
Oh. So you can't move your take profit any closer than 14 pips to current price?
Yeah. You can close it manually, but you can't, your stop loss and your take profit has always got to be more than 14 pips away from where the price currently is.
Wow, that's weird.
What is that, a spread issue?
Can't be a spread because spreads
Big.
so it's 140 points, which is 14 pips, but spread's 1.3. So it's yeah, I thought it was strange.
That sounded like a mechanical rule just to get people to fail.
I don't think it's to get them to fail.
Why else would you use the program that day?
It's just it's something that, yeah, I think it's to try avoid people from getting into a trade and then high frequency trading. I think it's to avoid that. Blue Guardian, many.
You mean people trying to scalp 5 pips here and there, sort of thing?
Yeah, when the market's moving so volatile, it would be like once price pushes up, say it pushes up 2 pips, then not letting you move to break even just to see if it runs. And then the same thing is like you can open the trade and close it manually, but you can have some, because they use demos. I mean, I know they use demo servers, and it's to avoid machine like algos that just scalp a few pips here and there. You know, like once price pushes up, close it, enter another trade. Once price pushes up, closing it, or like setting the profits. So it doesn't stop you manually doing it. It just stops you from setting the take profits and that. Because what I found one of we had a robot that was super successful on the demo account, and it was what we're looking for was this initial London Open period is what would do is it would we're looking for it to break out and then just push. But normally when, let's say that this was the high of German, and then London Open had happened, is that it would push up, and there's a chance that it will just keep on pushing and not come back. But as soon as it pushes up, as soon as we even get like just above the spread, the EA will just move to break even, and it will just likely get stopped out for break even. Then when it does it again, it does it. So we'd have like, sometimes it would take like 40-50 trades at take a 40 or 50 trades in like the hour, and we're just hoping one of them is able to push up and then just keep on going. And we hardly ever took a loss, because the time that it broke out, it's very unlikely that it triggered the trade and then just pulled back and didn't give you an opportunity to get out. Very rarely. So we thought this is our ticket to retirement, and then somebody chucked onto a live account, and the live account, the spread acts differently than the demo. So the live's got a lot more tick data, where the demo's got a lot less tick data. So we found the results just didn't translate to a live account, but the demo was looking brilliant. Hey, absolutely, like the equity curve was just like that. So then we had the bright idea to, why don't we just run it on a demo server, use a trade copier to send across to a live account. So it's only acting on the demo account, and the results, it was just sitting around break even. Just couldn't really get anywhere on it. So
was there a disappointment when you realized that your retirement fund wasn't forthcoming?
Well, we yeah, because you get really excited when it's like you build it, it looks good, the strategy test looks great. We run it on the demo over a month, and then it's looking brilliant. So we chuck on the live account, and then it's just not getting the same result. Like, So when prop accounts came out, I'm like, ooh, if we're running on demo accounts, that's going to be excellent. But I'm guessing like this wouldn't work then, because you can never bring the stop loss up to your entry, because stop loss has always got to be X amount of pips away from it. So I think someone has exploited it, and now it's not nicely upon. Commission, equities is no commission. So equities, well, we chose the broker that had no commission. It was just tight spread. Come on, keep pushing. I see Justin. Yeah, there's been a few like nice ideas that we've had that just don't translate to a live account when you factor it in. The way the spread acts is a bit different on the live versus a demo. What were the news I was referring to? You mean for later on, Ive? The euro interest rates. This main refinancing rate. Hey Tom. It's not till New York session though. But I would love it to push up. We haven't gone all this way here just to turn around without taking these guys. So I'm pretty keen for this to push up to 18,700 at the minimum. There we are. Let's go. So we could have a little reaction at this point. Ah, didn't mean to do that. Okay. Beautiful. 700 hit. Nice. Nice easy 20 pips there. Easy. Cool. Oh, we're done early. Yeah, nice one. That was pretty straightforward. Excellent if you got in earlier. But even jumping in, you got all these like this candle closing so strongly above, and it gave you so many opportunities inside of this area to jump into that for a buy. It was clear that it's not going to stop at this point. When you've got double top like this, that's an easy target. Plus we had that zone already picked. So this, even if you jumped in here, anywhere there, that's at least 20 pips for you. If you got in super late, because I didn't jump in until I waited for I didn't take it before the open. So after London Open, inside of here, it was like you missed a lot of the moves. Late entry, very late entry, but it's quite clear just to take an easy 20 pips off the table. Momentum was easily there from the previous day. So good one. Hopefully just carries on. Got clean candles here. We could have a little reaction at this weekly bit because this is last week's. You can see on the weekly candle, this is the weekly open. And it's the first time touch. I would say there's probably enough stimulus to just keep on driving, but on low time frames, these weekly open lows, highs, and closes, they've got algos set to like looking at those. So I can get if we have a reaction at this point. But there's a lot of momentum here. We've got gaps in candles. We've got gaps, just not fair value gaps like this here. Who's here that's good with ICT stuff? Anyone? So this is something that actually pointed out yesterday, day before, was because I was saying like this is a gap, fair value gap, and then when you have something that just takes the low, then it usually means there's heaps of momentum. So it takes you got this candle opens, next one opens, sets the fair value gap, and then this one takes it by like a point, takes the low by a point, and then just continues bullish. There's usually a sign that there's strong momentum. I think there's a word, some acronym they use when it's a fair value gap that's only filled by a point. But I'm not really across it all. But I've been noticing that a little bit lately. I noticed that yesterday with NAS, which gave me a lot of confidence to take some buys. When it was around here, around NYSE. Maybe it's on it could have been on a lower time frame actually. I don't want to have to go and find it now, but that's what I'm meaning. On a 6RR today. Oh yeah. Oh, look at this thing, man. So good. Makes up for yesterday. Yesterday sitting through this shit here. This sucked. That was awful. Just this owed us. And now we get a blessed day of volume. Beautiful. Nice.
It's been a game changer for me. You're helping me stay in stuff longer.
Oh yeah, that's awesome, man.
Yeah, it really makes a big difference. I
Yeah.
don't sort of jump at shadows to a certain extent.
Mm-hmm. Yeah, and there's some good topics coming. So we've got some really exciting stuff to show from last night. What I was looking at for this higher time frame. So we're gonna study session. I've got the next at least 2 to 3 planned out to like just do a bit of a deeper dive into a single topic rather than trying to be so broad. Sweet move in the end though. Yeah. It's killer. Gold's not really doing a lot. Gold still seem to be stuck at this 23.67 since we opened. I guess the money's in equities right now. So gold's not really knowing what to do. So this is the London Open. Look at the. Sometimes it's so funny how it just switches. Like this is the London Open. So far, crap. 20 minutes. I mean, it's so early days, but 20 minutes there versus Germans 20 minutes. Germans 20 minutes. We're already moved. 55. So this is the all-time high over here on the 16th of May. Oh yeah. So it's funny how like you can see like people want to see a crash. Because every time price pulls back, people start so quickly jumping on about looking like for full corrections. Hey. So quickly, every time we have like a 2 to 4% pullback, the bears come out, and I think it's the ones like I think a pullback would be absolutely healthy, but it's just been so dangerous. And I think there's a thing called the pain trade, and it's the trade that causes the most pain at the moment. It's the bears. The bears are just in so much pain watching this go up and up and up, and every single little pullback, you start seeing like my YouTube feed is just full of the bear opinions, and I never see the bull opinions. But then when I do see the bull opinions, it's like ridiculous numbers, absolutely ridiculous numbers. If I start seeing all the bullish sentiment as soon as I start seeing like all the investing, people saying like showing all the investment returns, and then just the YouTube getting like really, really positive, bullish, then that's going to be the time it probably turns, I reckon.
So Hayden, check out that trend line from the all-time high down to the last one. It coincides with 120 ticks for this London session.
Sorry, say that again. All time, so
So if
this
you draw
high to
a trend
here.
line from the all-time high, no, from the all-time high, you got to go all the way, go to the 1 hour, other way around.
Oh,
Yeah, from the, sorry, not the all-time high, that second, yeah, the all-time high, through the next one, yeah. That
Okay.
coincides with the 120 ticks for
for the
this
session.
current Euro session. Yeah.
Yeah. For a reaction from there. Yeah, for sure. Got a little block here as well. I could see, like, if we push up towards that and we're getting 120 pips for the session, and now it's getting close to New York session, the market will slow down, because at 1:15 p.m. London time, that's the interest rates. There's no way they're going to be powering through that. Price will stagnate before the interest rates, for sure.
Yeah, maybe a good time for your runner to take a drink.
Yeah, for even if you want to take like a little range trade inside of this box, if that's your jam, is to take like, 10 pips here and there. That could be a possibility. Got no resistance here though, whatsoever in this part. No resistance here. What time was this? Yeah, we're taking like. It's nice when it moves straight lines, but straight lines don't last. Already from Euro Open to where we're at, 120 pips as well. So that's something that's key. From low to high, that's a good run up with zero pullback. Zero pullback. So I wouldn't want to sell this thing, but I wouldn't want to be buying at this area either. Is that trend line equal to the last gap on the swing high? Trend line equal to the last gap on the swing high. You mean this bit here? You saying like, does that line up? Yeah, that's what I was meaning, like it lines up here. Because it's already been taken a little bit. Created the gap. So price pushed down, created the gap. That created the gap, and this one took it. So closing above this high here should quickly push up 17 pips, I'd say. But then once we get to this area, this is liquidity. When I see this stuff, like these 3 equal candles here, 3 equal candles like this. So drop, 3 equal candles. I've pointed this out a few times last couple of weeks. Drop, equal candles, drop. This is liquidity. So when price, I would say when we push above here, it should be a fairly easy move up. When we run into this, that could have a reaction. Not a like correction, just a reaction. A tradable reaction. when it's doing that, if it's going to be a bigger move, will depend on timing as well. But I'd say that get into above this one. This is in line with that trend line as well. Yeah. This is around 120 pips for London only. For the London Open, London only part of it. We've already moved 120 pips from Frankfurt Open. But if it pushes up to here, I'd expect to be some sort of reaction from this zone. Yeah, there's probably a few more up there. When you get to these like previous all-time highs, there's not like candles don't stay around here for a long time. So you get quite often you get a whole bunch of gaps. Yeah, pretty hard, because like once we do get up this high, once you do get up this high and then up here as well, price, you just run out of buyers. So as soon as you run out of buyers, price falls back pretty quickly. So it often leaves quite a lot of gaps. This can be hard to pick which one you want to target. $18,687. We're already past that 687. Or you mean this one, 787? $791. Yeah, that's the one I was talking about right here. That's the same one. Same one that lines up here. You're welcome, mate. All right. Are we going to fill some of these gaps, or are we going to form another bullish candle to have another push up? See how this 5-minute candle closes. This is going to be the 30-minute candle close as well. So when the 30-minute candle closes, we can have a bit more of a pullback. But then I'd imagine that we just go to take the top wick. So I would like to see maybe even pullbacks to the yellow line, basically. If we pull back to like here, 30-minute, can then do something like this, and then wick fill, and then keep the momentum going. So yeah, max pullback for the new 30-minute candle. I would like it to stay above this area. And if we wait for that, maybe we can get a scale in. I can just add to this to keep on pushing up. So 10 seconds, we've got 30-minute candle close. What we don't want to see is it do something like this. If it does something like this and starts breaking here, we could be part of a bigger correction or rejection wick on the 1 hour. I'm going to try scaling on this. I'd like to scale in something like this to keep on pushing up. I'm not sure where this will go. Will be the stop loss here. It would depend on what happens at this point. Oh. Upset. Jesus. Now you're saying Matt is always happy. Yesterday, Dave?
Yeah.
Well, she had two big monkeys in her nose that I noticed last night, and then I just heard her screaming. She's like, I just got them out. She's not happy. She was 8 months yesterday. So Danny and a lot of you guys on the hamper that Danny got us for when she's had all these little cards. So every month we've been doing it. It's been really nice.
So cool.
Form a little resistance here. It's not a pen in order. It's just the area I'm sort of targeting for this zone. Come on, gold. Something move. Been here now for 15 minutes. 8's a lucky number. Yeah. Oh. It's annoying. Didn't alert me to anything. Where's your target, Ty? 2356. Oh, down here. Yeah, that makes... I like that. I like that if it... But that wouldn't... Yeah. I feel gold just... The only way for that to go down... Because at the moment, the... this move up for gold wasn't anything to do with demand for gold. This was for US weakness. But the gold as well, when like this is a lovely area that it bounced off of on the daily. If equities continue to drive, I'd imagine that money would flow into equities. And I'd say that I would like gold. I'd feel comfortable for gold pulling back. But if equities are driving and US dollar is pulling back on the hopes of 2 rate cuts this year, then I imagine that gold is going to struggle in the way of pullbacks as well. Gold will probably stay relatively supported on US weakness. Not actual demand for gold, but if it is no demand for gold and just no one willing to buy gold, then we could have US weakness and gold weakness at the same time, which would lead to those pullbacks. The price action looks good. I quite like how we had some structure and then we've actually broken it and we're creating these lower highs. I do like that. Got trend line. So it is trend line liquidity to sweep, but let's hope that the trend line can create more liquidity and then push down to these lower areas. I would like it to do like a little fake out from that trend line. That's why I've got my zones here, these alerts here at this point. I'd like to see that. But yeah, I'm with you. I would like to see gold drop because Asian session been so bullish to me. That's should be plenty of liquidity here. Jaro, how do you get on with gold yesterday? I tagged you in the chat. If you saw. At around 11 o'clock your time last night.
Yeah,
Yeah, mate.
sorry, mate. Yeah, no, I didn't see that. Sorry, I've been picking up pretty early.
Oh, yeah.
Yeah, went okay. Yep.
Oh, good one.
Yeah, got a bit of a win there.
Nice. Yeah.
Yeah, thanks.
That was... where was it? Here. See that? That's where I was. It was hard to pick where gold was going to go when you were asking in the London Open, especially when there's just lack of momentum anywhere. I didn't know how the news was going to be interpreted, but then once the news came in, it was much more clearer.
So when's the interest rate decision coming in? Is it later today or?
We've had two. So
Okay.
their CAD interest rates were yesterday. And CAD's a surprise. Like the last few CAD interest rates have seen big moves in the market. That's why I thought yesterday was going to be a sneaky mover. Today we've got the Euro ones. Next week we've got US and Japan's.
There should be a bit of action.
Oh yeah, yeah, and tomorrow as well. Tomorrow we've got NFP. So I reckon that if we push, and then NFP comes in, I think NFP is going to come in with higher numbers. So we could actually see a bit of a, some of this momentum, the froth just taken off a little bit. I think it's healthy for it to come back. But if the labour market comes in low, I'm kind of expecting to see equities all up, just continue grinding higher and higher and higher until the US really do start cutting rates. And then when they start cutting rates, I think that's when everyone's going to be like peak bullish sentiment. But then that's the time when the pain trade comes in, where they've priced in those rate cuts, and then it starts to pull off. And there's a very real possibility that people would be looking at, investors would be looking at that as why are they cutting now? Have they seen something that's dangerous? Because like everything's sort of built up on it, just a couple stocks, and for Nvidia to continue the growth curve, it's going to be impossible for them to provide the same sort of profitability when they're valued that much. Does that make sense? It's just that, like, the law of big numbers. Once it gets too big, It's just impossible for them to keep the earning growth potential for because there's just not enough money in the world for them to keep on going up at that rate. So if Nvidia starts to do like a natural correction cycle and everything's so piled into it, then it's gonna, the small and mid cap sector and other companies are going to need to take up the charge. But I can imagine that we just have a little bit of a, 5-10% correction would not be out of the question. The other thing as well is this VIX. So when we're starting, like when we are getting close to a proper top, then this should be pushing above 20. That's when we're getting close to a market top. Until then, we do have times when it does get over 20. Right? So 20. So we had remember this was the bear market that we had from January 2022 until Feb 2023 when it was above 20. This corresponds with the same thing over here. So from 20, this is 2022 from here until here. So January 2022, you can see it on the screen, down to around January 2023. So all this was the bear market, and then we've been in a bull market since then. And if you look at VIX at this point, where we were above 20 for a lot of it. We had COVID, which obviously we know COVID wasn't great for the stock market, but when we were above and staying consistently for the best part of the year above 20, that was when equities are struggling. When the best part since then, obviously we've had little spikes up and down with bank crises, Israel Hamas kicking things off. Not sure what that was, can't remember what that was just a little while ago. But when we've been mostly underneath 20, these correlate well with bull markets. So we're going to have spikes, of course, but once we're actually consistently staying above 20, then I'd say that equities are in for probably a bit more of a correction that might turn into a bear market. Hey Eddie, how are you? Really interesting here. So we'll keep on targeting these kind of things as single topics for the study sessions. All right, so gold's coming down nicely now. We're down to 23.64. Bit annoyed that it didn't quite hit 23.70 for me to jump into sells. But this is what it is. Yeah. Just missed my alerts. But hopefully now we can drop. This is a German. Yeah, so what are we, 15-minute candle now. Starting to slow down. Oh, look at this. The last few seconds. Yeah, you should watch the last couple, Chris, especially the last two were single topics. I think would help a lot. Anyway, YouTube, I'm gonna give you my ideas, what I'm looking for. I'm gonna close it down. Members, stay on. I want to cover. I want to show you some things that I was working on last night. All right. So, but the ideas, YouTube, is this is not a pending order. All right, it's not a pending order. It is an order though. This is an area that I'm looking at. I really don't know where I'm going to put my stop loss. It will depend on what the price action is here. But I'd like to see price come down to it, and then this actually hold as a support, and then start getting some wicks once, like, if we've made a high, this is the high. I'd like to see price sort of make a higher low, and then this would be the, like, at least to retest the high, and then hopefully if the trend can continue, we can push up and make higher highs. And I'll be looking for, you know, all these zones up here can represent a few problems, but that's ultimately what I'd like to see a pullback to this area to retest the high and then continue higher. Once we get to 120 pips, that would, and then we're getting close to the London Open just before the New York session starts. We've got they've got the Euro interest rates, so I imagine price will probably stall around this area if we do get up there. There could be some range trade opportunities if that's your thing, but I would caution holding trades over the interest rates because wild things can happen. Gold, I just covered gold, so you can rewind on that one. But yeah, that's the idea. So I'm just going to put a little alert at this area because I'm going to it's not going to be pending, just to clarify, not pending order. I want to watch what price gets here, and then but I want to be alerted to that fact because I'm going to be doing other things. All right, so YouTube, thank you very much. Don't forget to like and subscribe, and I'll see you tomorrow. Okay, members, stay on. I want to show you some things. Cool. All right, see ya.